I made fun. Right, good afternoon. So we are in the discussion of taxable income from investment. That's the second category of income, or the third category of income. So we consider the second category of income. So basically, income received from an investment is recognized as investment. So here we need to first check. So as I told you, as per the dominant principle, whatever income what we are receiving, first we need to check whether it is falling under employment income. If it is not coming under the employment income, then we need to check whether it is falling under business income, right? Employment, then business. If it is not coming under business income, then we need to check whether it is falling under investment income. Right, so the features of this investment income is I told you it's a very passive income. That means the income receiver, his contribution is very minimal effort to generate that income. Right, and that we discussed category and category what type of income which is coming under investment income. And other important point what we discussed is investment income is subject to withholding tax. Right? So under the withholding tax, when the payer make the payment, he is supposed to deduct tax. Right? When he make the payment, he is deducting tax. it goes as advance income tax, so the mechanism is withholding tax. In case of the payment to outside, it is coming as, it is recognized as withholding tax, right? So he is deducting tax and remitted to tax authority. It is the income receiver's liability, right? Other than final withholding amount, non-final withholding amount, we can get tax credit. We can make a deduction when she work out her liability, total tax liability. From there, we can deduct advance income tax other than final withholding. So final withholding we cannot deduct because it is not part of, that income is not part of taxable income, right? So in Sri Lanka, there are three ways to, or the mode of payment, or the discharging ways of income, right? Tax can be paid, income tax can be paid. Withholding, that we discussed, right? Under the withholding, we discussed there are three sections withholding. Employment related payment, is called as advance personal income tax. Second thing is investment income. We call investment income. It goes as advance income tax. Service payment. So here, person who make the payment, service fee payment to resident individual or non-resident. So service fee payment is this, in case of the resident, it is resident individual. Payment made to resident individual. And that is also goes as advance income tax. Right? But that payment is goes to the person outside Sri Lanka, we call non-resident person. Right? It is goes as withholding tax. The mechanism is same. Right? So advance personal income tax, it is advance personal income tax, it is as per the advance personal income tax schedule table. If you have the table published by the Commission General Pillar, we need to deduct the matter of application of the schedule and make the payment. Right? Advance income tax on investment return. There are few rates. In case of the interest, it is 5%. Interest definition we discuss, discount, that type of thing, other than interest on treasury bill or the government securities, subject to withholding tax when the bank and financial institution or any other person is to make the interest payment. So he has to deduct tax at 5%. Right? When if the monthly rent payment is exceed 100,000, on the total amount, 10% need to be deducted. Dividend, it is 15%. When the company declared dividend out of its profit, he will deduct dividend tax, that is 15%. So any other payment, just like royalty, natural resource payment, that type of thing, it is 14%. winning from lottery, that type of thing. Right? So some final withholding here, just like dividend, that is final withholding. So if it is winning from lottery, which is subject to 14% tax, that is also final withholding. Right? In case of the payment to non-resident, that is also considered as final withholding. Unless it is other, if they have permanent establishment from Sri Lanka. So advance personal income tax, advance income tax on service related payment. It says if the monthly service fee payment is exceed 100,000. What type of thing? Independent personal services, that just like doctors, engineers, teachers, lecturers, that type of thing. Or lawyers. Right? So that if the monthly payment is exceed 100,000, tax is at 5%. Whereas in case of the non-resident person, it is 14%, irrespective of the amount. Right? That we learned last week. So that is withholding tax. Remember, in the case of employment related payment, employer is responsible to deduct tax and remit to the tax commission and general revenue. So whatever tax deduction for a particular month need to be paid on or before 15th day of the next month. Right? And also, employer is responsible for submitting a annual declaration and first statement of declaration. That declaration has to have all the particulars of employment, employee details, and the remuneration paid tax deducted. In case of the advance income tax, withholding agent, we call withholding agent has to deduct tax and remit to the commission general. In the case of the tax deducted for the particular month, the tax need to be discharged on before the 15th day of the next month. Right? Whatever thing, the interest, rent, dividend, or other, just like the natural resource payment, royalty, that type of thing. And also income lottery. Right? So, in case of the service related payment, same thing. The withholding agent has to deduct tax on that particular payment. Reason, if he fails to deduct tax, the agent fails to deduct tax, he cannot deduct that particular expenditure as a deductible expenses when he work out his business income. Remember, the employer side, he is running a business, right? If he work out the employer's income in, this is business income. In the business income computation, if any payment which is liable for withholdment, but the payer able to, so he cannot deduct entire expenditure. That is the issue with the Lanka or the parent to deduct taxes, right? So the agent has to submit a return withholding tax statement of withholding tax on before 30th April of the year, and certificate need to be discharged given to the income holder. Just like say in case of the employee should receive the certificate from his employer. He calls withholding certificate is called as T10 certificate. So he needs to confirm that what that actually he has paid. So I told you that it is the income receiver liability, but the payer is deducting tax. So therefore, income receiver, the owner of the income is entitled to get that credit. When he comes to his tax liability, he can get that tax credit as a tax payment. So that for that purpose, certificate is issued. Right? So that is the second method of the first method of payment of taxes. Right? So second method of payment of taxes is we call installment. Installment tax payments. That is the voluntary taxpayer. So taxpayer voluntary has to work out his tax liability and make the payment. This is called as self-assessment installment payment. Self-assessment installment payment. Right? So the taxpayer has to work out his tax liability. Work out his tax liability. Right? And need to pay tax by 4 installments. It goes as first, fourth, right? So he has to make an estimate tax payable for the year. The whole year he has to make an estimate. Based on that estimate, he has to pay installment tax payable. Right? The estimate tax payable, he can work out with this available detail and judgment or whatever thing. It is an estimate. So for the whole year, he has to make an estimate. Right? So once he work out the estimate, he has to submit that statement of estimated tax payable on or before the first installment due date. On or before the first installment due date for the whole year. First installment shall be discharged on or before 15th August. 15th August of the year. The second installment needs to be paid on or before 15th November, the same year of assessment. Third installment needs to be paid 15th February. That is also within the same year of assessment. Fourth installment needs to be paid on or before 15th May. That is after the year of assessment. So that is installment tax payment. Right? First thing he has to work out the estimate. Estimate tax liability for the year. Thereafter, he has to submit statement of estimated tax liability for the whole year. That shall be submitted on or before the first installment due date. Now he is making the estimate. Based on that estimate, he has to pay installment payment. Self-assessment income tax payment. Right? So, is there any changes to the estimate? Revision. So, I told that is the estimate. So, estimate can be changed. If there is a revision, that can be done before the new next installment due date. Before the next installment due date. Say, we'll assume that as the first installment payment, we work out estimate tax liability is 50 million. Based on that, we are paying taxes. Right? But when we work out the tax liability at the second installment due date, we found that say it's not 50, only a tax liability maybe estimated liability maybe 75. So he can increase and he can submit a revised estimate. Likewise, say assume that his liability has been going down, even he can make a revision. He can request to the assistant commissioner to make a revision to the statement. If it is not happened, that original statement submitted by the fixed installment due date or before shall be treated as the estimate for the whole year. Therefore, if there are any changes, that can be incorporated and it shall be made as a revision or the amendment to the original statement of tax payable. Right? Estimated tax payable. Right. When we work out that is tax liability, all the estimated taxable income and any deduction, and based on that rate, he can work out the estimate. And once he work out the estimate, that tax liability for the whole year should be tax payable. Tax liability. Any tax rate up to the installment due date. Tax rate divided by the number of installments. remaining that is number including current installment. Example, say we work out the tax liability for the year as 50 million. Right? First installment should be discharged by 15th August. At that day, we found that there is a tax credit, withholding tax credit 10 million. We can deduct that. And number of installment 4 at the first installment. So accordingly, we are paying 10 million. Now, in the second installment, estimate tax liability 50. Attaining no withholding tax, previously we had 10 million, we paid 10 million, tax rate we are only 20 million. Number of installment remaining, including that, is 3. Right? Likewise, he has to work out his installment payment and he should discharge by the due date. If somebody is failed to make the payment by due date, right? He is liable for interest at 1.5% on each and every month. He pays to do so. 1.5% interest. So if he is unable to pay within 14 days from the due date of the tax to be discharged, he is liable for additional 10% penalty. Right, 10% penalty. So, say we need to discharge by tax liability by 15th, by we pay by 30th August. Now within 14 days we couldn't make that. On that, liability is 10 million, on that 10% penalty. And because it's 1 day delay, even for 1 day it's 10% penalty. So interest from the estate 10 million for a month 1.5. That as I mean it has been discharged by September 30th. Now penalty as it is interest for 2 months. 2 months to discharge. Likewise interest is going. But the penalty is 10%. That's the short maximum penalty. Right? So that is installment tax payment. Now, installment tax payer, person who is an installment payer shall pay tax by quarterly installment. If he derive or expect to derive assessable income during the year of assessment from a business, investment or other income, from an employment where the employee is not required to install tax. However, gains derived or expected to be derived from the realization of investment asset during a year of assessment shall not be considered for the purpose of quarterly installment. Realization of investment assets, gain from the realization of investment assets shall not be part of that tax liability, shall not be part, that should be considered, should not be considered when we work out the estimate. Right. An installment payer shall pay installment for tax for a year of assessment not before the 15th day, respectively August, November, and February in the year of assessment, and the 15th day of May of the next succeeding year of assessment. Installment of tax payable by an installment payer for a year of assessment shall be calculated according to the formula. This formula. Same formula will be discussed. The formula: A is the liability, C is the tax credit, and the non-final including, and divided by number of installment due, including the current installment. A is the current estimated tax payable by the installment payer for the whole year. B is the number of installments remaining for the year or assessment, including the current installment. C is the sum of tax paid during the year of assessment prior to the due date of the payment. Tax is withheld during the year, not a final installment payment, but prior to the due date of the payment. Right? That can be calculated. So every person who is an installment payer, for a year investment shall file with the Commissioner General of first tax instrument and estimated tax payable. Right? Person taxable income for a year investment from each employment, business and investment and the other source of income. The person taxable income for the year and the tax payable with respect to that year. In estimating tax payable for a year investment, a person may make into account a foreign tax credit to be claimed. However, in order to in doing so, a person may take accounting of foreign income tax only if the person has paid the tax or the person reasonably estimate that the tax will be paid during the year. An installment payer estimates that payer's estimate statement what is submit is remain in force for the whole of the year unless the person files a revised estimate with the Commissioner General. Right? He can make a request to revise his estimate. That's the second mode of payment, taxpayer. Right? Now I told you last day that withholding tax is not a separate tax. It is the payment method of income tax. Right? So the second method of payment is installment payment. There is a process for that one. We need to make a estimate first. So based on our estimate, we have to submit the statement of estimated tax payable for the year, and that liability shall be discharged by 4 installments that due by 15th August, 15th November, 15th February, and 15th May. Right? Once you submit the estimate, it is remaining as active statement for the whole year unless taxpayer make a revised statement. Right, tax liability for the whole year, estimated tax liability for the whole year, tax credit available, including tax payment up to the installment due date divided by the remaining number of installments, including the current installment. Right. The third method of payment of tax is assessment-based tax. Right, assessment-based tax. So in the assessment-based tax, assessment-based tax. Thing is taxpayers assessment. Other side, Commissioner General of Inland Revenue can issue assessment. Taxpayers assessment are two things. Self-assessment income tax, capital gain tax. Capital gain means tax on the realization of investment assets. In such case, you have to calculate the capital gain tax return. Right? That is goes as taxpayers assessment. Payment is goes assessment based tax. So taxpayer is making an estimate for the whole year. Based on that estimate, he is discharging his tax liability. But after the completion of the year assessment, within 6 months, he has to work out his total tax liability for the year. Right? So once he works out his total tax liability, if there is balance tax liability for the year, it shall be discharged by 30th September, 6 months. 30th September. Or now before 30th September, he can make the balance tax payment for the year. That goes as assessment based tax. right? So you remember we work out the tax liability for the year based on our estimate, and based on that estimate we are making the payment, goes as installment tax payment. Once we work out the total tax liability after the expiration of the year of that month, within 6 months, we can discharge any balance tax liability for the year. It goes as assessment based tax, that is taxpayers assessment. Other taxpayers assessment is capital gain tax, and that is also goes as assessment based tax. Capital gain taxation is the realization gain on the investment assets, if any, that need to be paid by your capital fund. You have to submit a return, capital gain tax return within 30 days. After the from the month, from the end of the month, that asset got realized. Say this month we disposed say land, so it is treated as investment assets. Land is coming under the investment assets. Say keep as an investment. So any gain that is subject to capital gain tax rate could be 30 or 15. Okay. So once that realization happens, from the last day of the month, if the realization happens, the tax need to be discharged within 30 days. Right? Within 30 days. And capital gain tax return also need to be submitted. So that is taxpayer assessment. Commissioner General can also issue an assessment. By issuing assessment, he can collect tax. So Commissioner General side, I can say basically default assessment. Advance, additional government. Right? Default assessment is issued when there is no taxpayer assessment has been submitted. The taxpayer has to work out his tax time based on estimate. Thereafter, he has to work out his tax liability for the year. Then balance tax liability that need to be discharged by 30th September. After paying full tax liability for the year, he can submit his self-assessment income tax return by 30th November. It's mandatory, right? So once he submits that return, that goes as taxpayer's assessment, self-assessment. If there are any amendment or additional, taxpayer also can do that amendment, or Commissioner General can do that amendment. By amending that assessment, he is sending a amended assessment. Or if the Commissioner General feels, or the Assistant Commissioner feels that there is additional income which taxpayer has not been captured or declared in his return, he can make additional assessment. Right? So if the taxpayer fails to submit his return or the self-assessment, Commissioner General can issue an assessment that goes as default assessment. Right? Default assessment. Prior to the submission of due date of the self-assessment return, even Assistant Commissioner can issue an assessment. It goes as advanced assessment. By issuing that type of assessment, he can collect tax. That goes as tax paid on assessment. Goes as on assessment based tax. Right? That is also the payment method of income tax. Right? It says person shall file with the Commissioner General not later than 8 months after the end of the year of assessment a return of income for the year. That is taxpayer assessment. 8 months means year payment is ending in 31st March. Thereafter, he has 8 months. That means on or before 30th November, taxpayers assessment is to be submitted. The amount of tax remain to be paid for the year shall be paid on the date, that is 6 months after the end of the year month. If there is tax liability for the year, balance tax liability after paying installment, balance tax liability need to be paid within 6 months. That is 30th September. Every person with taxable income consists of gain from the realization of investment assets shall file with the Commission General Capital Gain Tax Return within 30 days after the end of the relevant calendar month in which the realization occurs. Capital gain tax return need to be submitted within 30 days from the end of the month, which is asset got realized. Right? Tax to be paid on the date on which the capital gain tax return shall be filed. In any case, on the date stated in the notice of payment or the payment assessment, say default assessment, they are stating that okay, you haven't paid tax by due date. This date, it shall be paid as it shall be considered as the due date for the payment. So that is tax payable on assessment basis. Right? I revised that. I'm the rewrite that discussion what we had. Any question you can ask. We can move to the today's discussion. Is it? What's the 9.5? No. Okay, anyway, that administrative part we are discussing separately. Assessment and again that assessment appeal and the penal provisions, penalties and that type of thing we'll discuss separately. Right. So if you have no any question, we can move to the next part. Right, the last or the fourth source of income. Fourth source of income. It says any other source. Right. So income could be coming from employment. We discuss what is employment and what are the things that need to be considered as employment income. Or it could be coming from business. Or it could be coming from investment. Or it could be coming from other source. Say any contract for the commission or the provision of services, it could be coming under the employment income. The employee-employer relationship, that means the agreement is there. From there, as per the agreement, then he is providing services. Right? Is there any trading activity or the profession or vocation that is coming under the business? If any income is coming from investment assets, that is coming under the investment. Right? So anything which is not falling under this one, and say income is falling under the employment income, we have worked out under the employment income. So it's not, so then we check whether it is coming under the business income. So if not, then it is whether we need to check whether it is coming under the investment income. If not, then we have to check whether it is coming under the other source of income. Right? So what are the things that can be coming under the other source of income? It says a person income from other source for a year of assessment shall be the person's gains and profit from any source whatsoever for the year, not including profit of a casual and non-recurring nature. So it says, what are the things that can be coming under other source of income other than casual and non-recurring nature income? It could be coming under here. That means casual and non-recurring nature income is not coming under the other source of income. Right? So I am repeating again. Say income. First, we have to check whether it is coming under the employment income. If yes, then it should be computed under the employment income. If not, then we have to check whether it is coming under the business income. We know that what is business and all those things. So if it is coming under business income, yes, we have to work out. If not, then we have to check whether it is coming under the investment income. So if that also not coming under the investment, that features are also not there, then we have to check whether that can be categorized under the other source of income. What are the things that can be recognized under the other source of income is other than casual and non-recurring income. Any income which is not a casual income or which is not a non-recurring income, then it could be coming under the other source of income. So this source has been kept as an open area to get that person to the tax lien. If it is coming here, yeah, we can. If it is coming here, we can. If it is coming here, we can. So to work out other income coming out of the other source of income, it shall not be a casual nature income or non-recurring nature income. Can also say there XM amount and final withdrawing amount we have to remove anyway. So XM amount and final withdrawing amount not coming under the taxable income. And amounts that are included in the calculated person's gain from employment, business and investment. Any income which is coming under employment, business and investment not coming under the source of income. That is also correct. What is meant by casual income? Right. In the context of income tax, refer to unexpected gain. It is unexpected gain. It includes things like game show prize, crossword puzzle, prize winning from knowledge competition law, other things that means that type of things coming under the casual income. Right? Unexpected gain, casual income means unexpected gain. So unexpected gain also not coming under the other income. That's the meaning. Right? Unexpected gain. So nature of this type of gains are unexpected. Just like games of chance. Casual income represents an extra financial boost that cannot be relied upon as a steady stream of revenue. It is a one-time occurrence, defined, establishing pattern or distribution. It's a one-time. Sometimes that type of income will never return. Right? That's coming under the casual income. So it is not coming under the other source of income. Right? Casual income means it is not coming under the other source of income. Casual income is not coming under the other source of income. So what the casual net income means? Unexpected gain. We cannot define, we cannot rely. It is received. It may be one time for the whole year. That is the casual net income. So casual net income is not coming under the other source of income. Other than casual net income, we can consider. Right? So example I can give you that competition, knowledge competition or talent show, they are getting income. So it's very rare chance to get again. Just like say zeros a million or whatever thing. That's a knowledge part, right? Competition. So that is also not coming under the other source of income. Why? It is casual. We cannot expect that will receive. Or one time for the life. Right? So that is casual net income. It shall not be considered under the other source of income. So what is non-recurring nature? Non-recurring income are gains that are neither part of ongoing cooperation, no an accurate reflection of future performance. Example, compensation for victims who are adversely affected by the war. Right? Non-recurring means there is no chance to rehappen it. That type of income also not coming under the source of income. Right? So therefore, other than this type of income, any other income is there that should be considered under other source of income. Right? So I'm going to say any income which is falling under these things, there is no doubt we can say these things need to be included. You remember when we work out the business income, say service fee that need to be included, realization gain from the depreciable asset need to be included. It says what are the things that need to be included. And business income and investment income also same. From any income which is received from investment, shall we consider the investment income? Just like say dividend, these things need to be included. Interest, royalty, that type of thing. Right? So then after work out these things, so there is another room for tax authority side or the government side to collect tax. It says any income which is not falling under these things and which is not casual and non-recurring, you can work out under the other sources. That is the meaning. Right? So therefore in Sri Lanka it is very, I cannot give some example. Here other than non-recurring income. It shall be worked out under the other source of income. Right? So therefore, very rare chance. You know that in some cases, I can give an example, very known example. You remember somebody told that so our auntie has a manic malla. So it is falling under the non-recurring or casual nature. Never happened. So we cannot expect it received again. The financial boost. Charm. No. So that's the meaning. So if it is not coming under here, it is not coming under the taxable income. So then it is not coming under taxable income. Then so no tax. Right, game of chance. Just like say as I mentioned, so say million liberty, we got that million, 2 million. It is not taxable. Right? It is non-recurrent. Very rare chance to happen again. And casual. Not happening. Okay? That's right. So another person told that somebody has given money, he cannot find out the person who gave that money. Right? You remember? That story was there. මම දන්නේ කට්ටියක් අතර එකපාර මට සල්ලි මල්ලක් දුන්නා කවුද? මම කවුද දුන්නේ කියලා දැක්කේ නැහැ. So just like if you are on the road, you can find some money. So casual income is not coming under the other source of income. There is no chance for you to tax that. Right? So those are the things. So if there are anything other than those, it could be coming under the other source of income. Right? Clear? Right. So then we need to work out each and every source of income. Now that's the source, all four sources of income. The three sources of income we have discussed. I believe that because we discussed some extent that employment income also. So all those things, assessable income we call total assessable income. Total assessable income. Right? Now, when we work out total assessable income, the exempt income we have already taken out. Because why? Exempt income is not liable for tax. And also remember, final withdrawing amount also we have taken out. Right? You can see here also they are deducting, removing amount that are excluded, sorry, exempt amount and final withdrawing amount. We are removing. All the four sources of income that flows are there. Exempt amount and final withdrawing we are removing. Exempt amount and final withdrawing we remove. Exempt amount and final withdrawing we are not considering. He also said, reason is that we are working on taxable income. Why? In Sri Lanka, person liable for income tax on taxable income and final withholding amount. So the final withholding amount we need to work out separately. It shall not be part of taxable income. This separately we have to consider. Right? So that's why we are removing that. So therefore, if anything coming under income coming under taxable income, it could be go till taxable income. Right? Now you know what is total taxable income. Right. So what is taxable income? Taxable income, now we know how to work out taxable income. Now taxable income. So the taxable income of a person for a year of employment shall be equal to the total of the person's taxable income from the year from his employment, business, investment, and other source of income. In arriving at taxable income of a year of employment, qualifying payment and relief for the year can be deducted. Shall be deducted. So now we know what is that taxable income. From taxable income, we can remove two things. First one goes, what is qualifying payment, relief. Qualifying payment and relief. Qualifying payment and relief, we can remove. The taxable income of year shall be determined separately. these two we can total taxable income. From that, qualifying payment and relief we can deduct. We don't know what is qualifying payment and relief, but we can deduct. And then we call taxable income. That is taxable income. Right? So we'll see what is the qualifying payment and relief. I believe now you know how to work out the taxable income from business and how to work out taxable income from investment. And if any taxable income from one source, so total taxable income, from there we can deduct two items, qualifying payment and relief. So what is case qualifying payment, section 52. Qualifying payment. It says payment. Payment means sometimes of expenditure. Why I am making the payment? Some more or less called expenditure. Qualifying payment. So that payment is qualified for deduction for tax purpose. That's why it's called as qualifying payment. That qualifying payment. That payment is qualified to deduct from taxable income. Therefore, we recognize as qualifying payment. Relief. Relief means some sort of benefit given to you. Tax pay. Relief. Additional benefit. Relief. Right? It's relief to my head. Relief. You are releasing something. Giving some sort of benefit. So, some benefit. You can see what I want to highlight. There is no income removal from there. Once we work out the total taxable income, no income is deductible. So if anything coming under taxable income, it goes till taxable income. Therefore, if there is an exempt amount, we have to work out and remove when we work out the taxable income. Exempt amount we cannot deduct here. Why? There is no chance to deduct any income. Only qualifying payment, that is some sort of expenditure of payment. Other thing is release can be done. Right? So ඒක නිසා tax එක හදනකොට taxable income එක work out කළාම expenditure මොනවාද so income අඩු කරන්න බෑ. When and there when you work out an income element that is not part of taxable income, you have to remove. So basically, final recording amount and exempt amount we have to remove. Clear? So once we work out this thing, it's called as taxable income. Taxable income. Right? Taxable income. So then we have to apply the tax rate and work out the tax liability. That's how that computation goes. So that is tax on taxable income. Tax on final return amount we have already paid right now. Example, say when we are receiving dividend, the company will declare dividend is deducting tax at 15%. That is recognized under the final return amount. So we have already paid. That's our tax liability. Then and there we have paid by way of withholding. If you are receiving what is this winning from lottery, it is subject to 14% withholding tax. If it is exceed 500,000 rupees, winning price is exceeding that one, so it is also final withholding. It is not coming under here, right? Right, guys. That final withholding amount also we are that income already we have paid tax. This is tax on taxable income, tax liability on taxable income. So going back to the charges section, tax liability for a person is equal to the tax on taxable income plus tax on final withholding amount. That is the total tax liability person who is liable for Sri Lanka tax person. But here what we work out only tax on taxable income. Right? Final withholding amount we are anyway paying. Who is paying? Payer. When he make the payment, he is deducting tax. So thereafter, we can apply the tax rate and work out the tax rate. Tax liability. Tax payable for the year. Taxable income. Into tax rate. Right? So then we need to know what is qualifying payment, what is relief. Right. So therefore, tax liability of a person, taxable income from employment, taxable income from business, taxable income from investment, taxable income from other sources, if any. So total taxable income, qualifying payment and relief, we can deduct taxable income. Right? So as we discussed, what is the source? Employment, business, investment, or other. So then taxable income exclude as part of respective section source, exempt amount, the schedule final return amount we can deduct. So then when we work out the taxable income, qualifying payment and relief we can deduct. So what is exempt amount? What we have discussed previously, I have summarized here. So under the investment income, gain made on realization of investment asset, which is comprised shares quoted in the quoted company, interest on foreign currency deposit, just like NRSC, RSC account, that is also exempt. Interest on foreign currency, what is this? Person who has given loan to Sri Lanka, government or otherwise, that interest also exempt. Price issue from president, that is also exempt. Personal fund, that is also exempt. Sovereign bond, that type of things are exempt. So that means denominator is foreign currency issued by the government of Sri Lanka. So winning from lottery, I mean I have summarized all those things, but very important things are these things. Winning from lotteries, that gross amount is less than 500,000, that is also exempt. Senior citizen is purchase of the annuity, right? And just like the investment plan and all those things, if it is more than 10 years, then that income received from that particular fund is exempt. That's why the insurance company selling that wealth fund is tax exempt. So how it's happened? So you are contributing monthly basis, thereafter they are paying, right? That's also tax exempt. So dividend from this type of things are tax exempt, right? And sale of gem, which is subject to 2.5% withhold tax, that is also exempt. Charitable institution, that is also exempt, tax exempt. So in case of the business, non-resident person are carrying out this type of activity, and services rendered in or outside Sri Lanka to party outside Sri Lanka to be consumed outside Sri Lanka, earning in foreign currency. Then to bank, that is also exempt. Any foreign source, that is also exempt. A foreign source means income is originating not from Sri Lanka, generally from outside Sri Lanka. That is also exempt. Right, this is 24, 25 years. So on the Colombo port city, that is also exempt. Port city investment. That's exempt. So these are the exempt amount. And the final withholding, we discussed these things. Coming on the final withholding, repeat again. Right here. Winning from lottery, dividend, payment to non-resident other than through a government establishment, set up SICA final withholding. Right. So what are the things coming under the qualifying payment and bill? So section 52 says, in arriving at the taxable income for individual or entity, qualifying payment can be done. Either individual or entity, they are entitled for qualifying payment. But an individual, they are entitled for relief. Therefore, remember, for a corporation, entity, no reliefs are there. Only individual has relief. So, in our case, we have worked out the tax liability of the company. Therefore, no relief, only qualifying payment. Right? So it says in arriving at the taxable income for individual who is a resident of Sri Lanka, that's also entitled for resident individual. They are entitled for relief. Another thing is in arriving at the taxable income for individual who is not a resident of Sri Lanka but citizen of Sri Lanka, that qualifying other relief are also there. Right? So we'll see first what is qualifying payment. So under section 52, these things coming under the qualifying payment. Say, in arriving at the taxable income of individual or entity for year of placement, in aggregate qualifying payment referred to in the 5th schedule to this act shall be done. Qualifying payment, that's so say donation made by an individual or entity, money to an approved charitable institution. Says donation made by an individual or entity in money, that means cash donation, to an approved charitable institution. Approved charitable. Says approved charitable institution. So what is charitable institution? Charitable institution established for the provision of institutionalized care for sick or needy. That is coming under the charitable institution. Not all charity. So in our language, you are doing in this charity. But from the tax point of view, we need to claim qualifying payment. Charitable institution means it is an institution established for institutionalized care. For what? To whom? Sick or needy. That is coming under the charitable institution for this purpose. Right? You know that say temple, church, mosque, that is also a charitable institution. But for we to claim under any donation made to that type of thing, we to claim under the qualifying payment, it shall be an institution which is doing for the care for sick or needy persons. Right? That type of donations are we can deduct. Otherwise not. Right? So therefore under qualifying payment, first thing is donation. Donation to charitable institution in the form of money. Indirectly says that is goods donations are not considered as qualifying payment. Only money donation to charitable institution. What is charitable institution? Institution established for sick or needy people and published by the ministry. Otherwise, declared by the ministry as an approved charitable institution. The ministry has, subject minister has to approve as a charity. Give me an example. Yes. So different liable people, that is some sort of homes. You know, open age, children homes, elderly homes, elder homes. It should be first thing what is? There should be an institute. They may institutionalized care. And protect by them. Okay. Look after them. As the institute. For sick or needy. Either sick or needy person. And it should be declared by the ministry as an approved charity. Otherwise, that is not a deductible. What is qualifying payment for tax purpose? Right? So if you are making a donation to say temple, it is not. It's a charity, right? You know that it's a charity. But this purpose it is not a charity for qualifying. So important point is that donation it should be in the form of money to the charitable institution which is defined here. Right? And other important point is deduction can be made subject to the maximum of, there is a maximum amount that we can deduct. Maximum amount is in the case of an individual, 1/3 of the taxable income. Individual can be claimed 1/3 of the taxable income. ඔක්කොම donation total එක deduct කරන්න දෙන්නේ නැහැ. Taxable income එකේ 1/3 total income. That is donation to approved charity. In qualifying payment taxation, first thing is it should be in the form of money and to be made to the approved charity. Approved charity definition is institution set up for the sick or needy person and declared by the ministry. And also there is a maximum limitation what we can deduct. That is 1/3 of the taxable income. Or rupees 75,000, whichever is low, less. 1/3 of the taxable income or rupees 75,000. So in case of an entity, and for the individual person entity, 1/5 of the taxable income or rupees 500,000. That's the maximum amount what can be done. Say we made an 1 million donation. Say our taxable income is say 300,000. Is 1/3 of the taxable income or rupees 75,000 in case of the individual. In case of the entity, say company is 1/5 of the taxable income or rupees 500,000. That is the maximum thing what we can do. Right? That is donation to approved charity. So, important point here is it should be an approved charity. Donation should be in the form of money. There is a maximum limitation what we can do. Right? Remember, exam එකේදී මම ඔක කොච්චර කිව්වා ඕක මොකක් හරි එකක් කරලා බලන්න. අර හොදට මතකයි යන්නේ. Right? Exam එකේදී exam context එකේදී දෙන්න මේක money donation එකක් approved charity දෙන්න details දෙන්නේ. He is donating, so sometimes say ABC Limited is say manufacturing biscuits. They have given some sort of biscuit to say children home. Likewise, say it's a toy manufacturing company, toys are given to the children home. Right, likewise is selling. So it is not a qualifying payment. Why? Donation should be in the form of money, not in the form of goods. In case of the approved charity. Charity is approved, declared by the approved, but it's not a qualifying payment. Right? And even if the qualifying payment, there is a maximum limitation what we can deduct. In case of the individual, it is 1/3 of taxable income or rupees 75,000. In case of the entity, 1/5 of the taxable income or rupees 500,000. That's the maximum what we can deduct. Good question. Taxable income is how we find it. So then how we know the taxable income? Right? It should be so intuitive we have to work out. Or otherwise, you can simply use this one. Taxable income. Because after deducting qualifying payment, taxable income is coming. But the law says taxable income is after we have to use the yardstick. On that, 1/3 or 1/5. Then you have to work out either 1/6 of the assessable income and 1/4 of the assessable income. Right? So more or less, you can see 75,000 and 500,000. Yeah, based on the taxable income, we can at least design, right? Say we have say taxable income, say 100 million or 10 million. So obviously that 1/3 of the taxable income is say 3 million, right? Or 150 is more than 1 million. Here, what is the maximum limitation is 75,000 in case of the individual, otherwise 500,000. From that base, we can go. Right? Good. So that's all. Actually, it is there in that. It is as for that. Access taxable income. Ideally, it should be taxable income, right? Why? We work out the taxable income. So therefore, we don't know when we deduct in this thing what is the taxable income. It's a mistake. But that's the law. So I mean the making තුලින් එකක් කියන්නේ making ඊට වඩා වැඩි නේ. Therefore it should be other. Right. So that is the first thing, right? Donation to approved charity. Second thing is donation made by an individual or entity in money or otherwise. In money or otherwise. That means it says goods also possible. Otherwise, two following these things. What is? It says the government of Sri Lanka, donation to the government of Sri Lanka, a local authority, any higher education institution established or deemed to be established under the University Act, higher education institution, recent Bar University, fund established by the government of Sri Lanka, fund established by the local authority and approved by the ministry. 7 fund established by the provincial council and approved by the ministry. Appear in Api fund, national kidney fund. Right? So, to me, I can analyze it this way. Donation to government, local authority, and fund established by the government or the local authority, and specified funds, and specified institution. What is that? So, say government means what is? Donation to government means what type of thing? Government represent what is? Ministry, authority, department. Say if you want to make a donation to say school, it should be education department. Right? If you want a donation to hospital, government hospital. It's government under the health ministry. So that is done. Local authority, you know. These are higher education institutions advanced or deemed to be established the University Grant Act, the University Commission Act means universities. And just like higher national education, the diploma and that type of things are operating. So under the University Act, it should be approved by the University Act. Right? And any fund established by the government, that is also government, right? Government fund. Or other funds established by the provincial council or the local authority, approved by the ministry. These are special funds, 7 funds, appearing funds, national key, or positive fund. So positive fund also established by the government, right? So there it says it could be money or otherwise. And there is no maximum limitation of whatever donation what we make can be done. Right? Can be done. Okay? Clear? Any question? Yeah. It's a money or otherwise. There is no limitation also. So total donation we can get. So practically how for the tax purpose of view. And then for the Commissioner General side, he can request a official document from the person who received that donation. If you are making a donation to the hospital, that health ministry has to acknowledge that they have done so much of donation. Say if you are donating to the government school, Ministry of Education, through that Ministry of Education, you have to get a confirmation. That's the donation what you did. That will be so much. Market you can, in the market you can. But the school bags we are giving. So what is the bag market so because you are incurring cost to that thing, right? So that can be considered. That's the market. See? Yeah, like this plastic now. This real case. You know that the suicide one nine. Suicide ambulance 1990. So the suicide. If you are donating a ambulance to suicide, there is then taxability. We did not screen. Yeah, we are going to donate a ambulance. Is that taxability? Can one. Whether uttare man ke. Huh? It is. Yeah, when we work out the assessable income, it is disallowed. Can we get any tax on the benefit? Because it is not incurred in the production of income. So therefore, there is no relationship between the generation of income, the donation made to the society or whatever. Therefore, it is disallowed. Section 11 very clearly says it should be incurred in the production of income. Yes, this is allowed. Hey, tax bill.
Qualifying payment, we can deduct from it.
Good. Yes, it could be whether we need to check whether it is coming under the qualifying payment. Yes, then we can deduct. So qualifying payment. So that's that. So remember. So if you don't get a business income, we don't loss the business loss the tax second loss. Say, capital claim. Otherwise, we have accounting profit, but we work out the assessable income from business, we have a loss. When we work out the loss also with that qualifying payment or whatever thing that payment donation made to that thing is disregard. That bad. Can we claim that qualifying as a qualifying payment? Assume that is coming under the qualifying payment. Can we do that? Among the simplification. So when we work out assessable income from business, it is negative. That means loss. But we have interest income. So there is assessable income from investment. And also we have made a donation to say, assume that is has been given to say school, right? So that is deductible fully, government school. Can we deduct that qualifying pay from interest income? Okay. okay. Can? Why? Taxable, I mean, say, taxable income is in, oh yeah, taxable income is the taxable income is going over. Taxable income is coming for the payment. Taxable income. Oh, now that, after that business again, the donation is only. Right, business income is not taxable. But we have investment in. Take a taxable. Income is that qualify. Can we get that qualifying payment for that investment? Based on the regulation, or access that donation given to the government. No limitation. But I think can be done. Can be done. So remember, so what your point is, if you have a acceptable income, we deduct qualifying payment from this actual income. We are not bothering about whether it is coming from employment, business, investment, or other source. It is on accessible income. Accessible income to taxable income we have. So then we can deduct. And not necessarily say we did the qualifying payment from business, but we don't have the right now business income to tax. But we have investment income, yes, even investment income we can get. Why? Qualifying payment or the relief we are deducting from accessible income. Limitation is we work out some on that's fine. But here there is no limitation of from accessible income entire qualifying payment we can deduct. That's what you remember when we discuss the objective of imposition of taxes. First one is revenue objective. Second one is economic objective. Third one is social objective. I told you, encourage to some activity. Tax can be used as a tool for the betterment of the society. That's also important. So therefore, tax is giving an encouragement to people to do donation. Business income is so then nobody is doing that type of donation, right? But that is good, right? If somebody is doing that donation, it's good. So therefore, tax will give some sort of law. Misuse කරන්න දෙන්නේ නැහැ. ඒකයි අර කියන්නේ approve charity එක define කරලා තියෙන්නේ maximum limitation එකක් දාලා තියෙනවා. Otherwise they can say or get a confirmation from somebody else. Okay, telling that okay we have to do so much of donation, give us the confirmation. යාළුවෙකුට කියලා ගන්නවලු. It's not possible. But in case of the government donation and all those things, very regulated, right? හැමෝටම මේක කරන්න බෑ. So you cannot request a letter from the Ministry of Education that I have done so much of donation. Somebody has to give a confirmation. Yes, what is the donation? Because without approval, you cannot give that donation to whatever thing. Hospital එකට එහෙම ගිහලා මොන මොනවා දේවල් දෙන්න බෑ. because දුන්නා. It's a protocol. Right? You have to get an approval and thereafter. කැම්ප් එකේම දාන එහෙම දෙනවා කියලා කොට දෙන්න බෑ කියලා hospital එකට අපි don't ඕනේ. ඇයි? They don't know some islands, right? Therefore, with the approval of the doctor, he can give that dana or whatever. Likewise, so it's not possible always get that confirmation. So, therefore, we can do. Right? Right. So there's no limitation. So in the question what I asked, we need to check whether it's coming under the donation. Qualifying payment. So ඇත්තටම කියනවා නම් මම ඒක අහුවා දැන් ප්‍රශ්න අහුවා. මම to whom you are giving this one? The source area. Source area what is that? Whether it is coming under the issue of health. Because ambulance health ministry is not coming under the Ministry of Health. Then it is not a donation to government. What is that? It's a separate trust association. Social association. It's not coming under the government. Right? But it's a partnering with Ministry of Health. They have some sort of arrangement. So how I structured, I told that okay, then you made the donation to the Ministry of Health. You donate the money to the Ministry of Health. Ministry of Health can fund that to the society to buy ambulance. So from the Ministry of Health, I got a confirmation confirming that they receive so much of money. Then it is qualified payment. There is no maximum limitation. Entire thing is deductible. Tax saving is 30% of the donation. Right? You can see. So, ඒක කියන හැම donation අපි මන්ත්‍රයට මෙච්චරක් දෙනවා අපි මෙයා කරනවා අඩු ගන්න බෑ. No, that is not possible. So we have to check. Right? Therefore, first thing is we need to check whether it is coming under the approved donation. Right? Approved donation. Right. This is the second qualifier pay. Third one. So it's also individual. Contribution made by a resident individual. That is also applicable only for individual. So examination context is not much important, but for the knowledge part, right? Resident individual in money or otherwise to establish a shop for female individual who is from a Samudri beneficial family. Special thing. As recommended by and confirmed by the Department of Samudri Development. Samudri Development, Department of Samudri Development recommend and confirm that donation made to a female individual who is from Samudri beneficial family to start a shop. So this is especially for cinema industry. It says expenditure incurred by any person in the production of film at a cost not exceeding 10 million. Sorry, not less than 10 million. Yes, exceeding 10 million. Film එක හදන්න වියදම් කරන එක 10 million වුණා වැඩි නම් is coming under the qualifier. Second thing is construction and equipping a new cinema or at a cost not exceeding 25 million. අලුතෙන් හදනවා නම් අලුත් the cinema hall එකක් not exceeding 25 million. Third one is upgrading existing cinema not exceeding 10 million. And in that context, they can deduct 1/3 of the taxable income. 1/3 of the taxable income. Or if there are any balance thing that can be carried forward to next taxable period, then next year of taxation, that can be done. There is the option to carry forward that. In the first two things, there is no option to carry forward. Only this one you have carry forward. Right? Just like you know that cinema industry is somebody is මේ දාස මොකක්ද යන්නේ මොකක්ද එතකොට එන් දාන්න ඕගාල පබ්ලිෂ් කරන EFM එකේ එහෙම කුසුමාස මේ කුසුමාසනේ ඔය මෙයා ඉන්නේ කවුද රඟපාන්නේ උදාරි බලන්න නේ and අනිත් එක්කෙනා කවුද Hemal කවුද ඈ Hemal අලසින්න සීන කුමාරයා ඒක හොඳයි වගේ මම ටික producer is good right Jan Kanzige යකින් හොඳයි right so its equity is not less than 10 million yeah that producer can deduct manufacturer producer company ne දාන්නේ කවුද මොන මට මතක නැහැ with the Lanka production Lanka production that means somebody has that ownership of the company or the business he can deduct and these two are for cinema halls you remember Majestic City and you know that now Colombo city center they have opened a new cinema they can get them. Yeah. So construct a new cinema with the new equipment. So 25 million, not less than, not exceeding 25 million, maximum 25 million. And other thing is upgrading existing cinema, not exceeding 10 million, maximum 10 million. So, but in the particular year, we cannot claim only 1/3 of the taxable income. If then balancing, we can carry forward. Right? Right. So they have given the definition for what is film means any audio visual presentation of the movie image produced to be exhibited by projection of on screen. එකක් විතරයි. Screen එකක දාන එකක් විතරයි. Film එක කියන්නේ. Projection එකකින් screen එකක දාන එකක් තමයි film එක කියන්නේ. Movie characters scene. Right? So the practical how is happening this is the film hall production right? Right? We have to get an approval from the National Film Corporation. So it has to approve, confirm this cost. That they are giving a certificate. Whatever the cost certificate that certificate to be submitted for tax purpose. Actually, when I worked 3 days, I claimed this thing for the regional cinema. They construct new cinema, just like say Colombo City Center and this thing. And South Korea something as well. You remember in the Majestic City they have they upgraded that cinema using new Dolby system. So we claim we got a certificate from the National Film Corporation, and they confirm that how much they have spent. So with that, we claim. So the 1/3 of the taxable income and balancing we can carry forward next year to next year of advance subject to same limitation we can claim. That's all about the qualifying payment. So now if you summarize the qualifying payment, donation to approved charity. Second thing is donation to government, special fund, special institution, and third one is donation that national, but the Samudriyam, that thing is Samudriyam, that is small thing that is only for individual, and film industry donation, right? That is coming under qualified payment. Now relief, you can see only relief are available for individual. Relief are only available for individual. It says in another taxable income of an individual who is a resident in Sri Lanka, that is also applicable only for resident person, resident individual. For Europeans, the aggregate relief report in fifth schedule can be deducted. So relief up to rupees 1.2 million for a European, that is only to 24-25 or 25-26, that is 1.8 million. So 1.2 million personal relief for resident individual. That is for personal relief. That's why you remember. So you remember that rent income exceeding 100,000 subject to withholding tax. The service fee related to the individual, resident individual, exceeding 100,000, they are deducting 5% withholding tax. Why? Up to 1.2 million, he has a personal relief. Personal relief has කියන්නේ මාසෙට කීයද එතකොට? අවුරුද්දට මාස 12. 1.2 million $12 මිලියන මාසෙට ලක්ෂයක්. ලක්ෂයට වඩා වැඩි නම් තමයි taxation නැත්නම් ඉක්මනට. Then if you check that APIT table 1, starting it says if it is more than 100,000 APIT applied, otherwise not. That table එක හදලා තියෙන්නේ 1.2 million consider. Right, then class පණන්න හය. So trustee receive executive liquidator shall not enter this one. The relief shall not be deducted against gains from the realization of investment. Realization of investment is 1.2 million අනුකරන්න. That means tax එක අපේ assessment based pay කරන්න බෑ. Right. So an individual with rental income from an investment asset, that means rent income as an individual කෙනෙකුට he can claim 25% of the rental income as a relief. We call rental relief. Rent income में 3 क्यों इतना? For what? Depreciation, repair, maintenance, and depreciation. So he is not claiming actual expenditure. He can claim 25% of the rental income. Renting coming into 25%, he can deduct. That is as the relief. You can say that is also some sort of benefit, not income, right? They come with income limit. 1.2 million එකක් දෙන relief එකක් විතර ඒක දෙන්නේ resident individuals ගන්න විතරයි. non residents වලට ඒක නැහැ. and 25% relief එක දෙන්නේ rent income එකක් තියෙන කෙනෙකුට විතරයි. for building rent income එකක් තියෙන. ඒක හම් වෙන්නේ මොනවාටද? repair maintenance and depreciation වලට අඩු කරන්න නැත්නම්. rental relief for resident include. That's also for resident include. Right? Other relief this one. Individual who has acquired solar panels to fix on his premises and connect to the national grid. 600,000 for a year of investment can be claimed to the extent that total cost has been absorbed. That is called solar panel relief. So it's the condition. What is that? Individuals who fix their solar panels to his premises, and that solar panel should be connected to the national grid. Retail high කරන්න. Maximum claim කරන්න පුළුවන් අවුරුද්දකට ලක්ෂ 6යි. හැබැයි total එක අඩු කරනක ඉස්සරහට claim කරගෙන ගියා. Total cost එක යනකම් ගියා. Say 2.5 million I have to pay. 600,000 each year government I can pay man. Or until the total amount is here. Right, that's also for individual. Now relief are only for individuals. That's all. Right. So then next one says this 1.2 million is available for even non-resident but Sri Lankan citizen. Non-resident but Sri Lankan resident citizen. කියන්නේ ලංකාවේ නැති ඒක non-resident වෙනවා. ලංකාවේ එළියේ ඉන්න ලාංකිකයෝ citizens in Sri Lanka. They can claim that 1.2. Even they non-resident. Other non-resident they cannot claim that personal. Right? Right. That is relief. Qualified payment average. Any question? Any question? Yeah, what about BSAA again? No, what institute you are to do? If it is government, yes. The BSAA budget අගට අපිට හදන්න පුළුවන් මොකද්ද? පාරක් හදන්න පුළුවන්. So the government එකේ road development authority එක හදන්න approve කරගෙන you do? Yes. Hospital level say what budget? So it goes to the health ministry. Government. Yes, we can. So we have to structure in that way. BSAA budget එක කරනවා කියලා අපි ඉතින් පාරේ ඕනේ. But if we are putting in a structured way, we are obtaining a approval from the government, and with the approval of the government, we do that one. Yes. Right. So even the project company they donated screen. Digital boards to school. The school so ultimately I give an advice. Okay, you got an approve the confirmation from the Ministry of Education through that respective principal. Principal level අපිට මෙච්චරක් හම්බුණා. ඒක certify කරගත්ත Ministry of Education එකේ මෙච්චරක් වැඩිවක තියෙන because they have their bills. මේකක් අපිට නිකන් දාන්න බෑනේ. There's a dealer in Sri Lanka, there's a cost for that one, so that they have given that. Then it's fine. And it's called it should be donated to what it should. Government pay. Government pay. Then we see a good not a approved one. Not action. Right? Clear? Then the flood. So we are given to dry packet of food status. Is that get the gavel not again? Don't make it. It should be through ministry. Disaster recovery ministry through yes. I have a donation ministry. So we distribute, that's fine, but donation goes through ministries. Goes for tax purpose, it goes to the government. And fine. Right? Clear? So that's coming under the tax plan. So therefore, ඒක තමයි මම ඔබ සෙන්ටරල් වෙනවා මොනවා කැම පැකට් එකක් දෙන්න ගියත් ඕන් ටැක්ස් එක එක්ක නෑ ගහනවා. මේක අපිට ටැක්ස් එක ගන්න පුළුවන්. මොනවා බෙනිෆිට් එකක් තියෙනවා. So how we can structure this one? So that's the way. Right? එහෙම නැතුනොත් බෑ. වැඩ මොකද මට හොඳට මතකයි එකපාරක් during that COVID period lot of donation made no people but some are not qualified. They have given to the hospital, yes, that's fine, okay, but they didn't get they have done on an individual basis or whatever thing. But ඒක proper mechanism එකක් කරන් හරහා කරේ නැත්නම් we cannot play. We have නැතුනොත් මොකද කරන්නේ මිනිස්සු ඔක්කොම කියන අපි මෙච්චර donate කරලා එච්චරක් කරා කියලා claim කරනවා. But it's not possible. In Sri Lanka it is not. In other countries there is mechanism to them to recognize that how much they receive donation. Right? මොකද එහෙම ඇත්තටම purpose එකක් තියෙනවා. So purpose is what is good behavior, good action over the equal good governance. Betterment for the society. ඒක මොනිටර් කරන්න දෙන්නේ නැහැ නේද? මිනිස්සු වෙන්නේ also people or the individual company or the person is coming with good being or the what the thinking. The purpose is very good. ඒ මෑත වැරදි කරනාටත් ඒක කරන්න පුළුවන්. Tax එක නොගෑනේ මොකක් හරි නම් ජාලපරයක් කරන්න පුළුවන්. So it is not permitted. Right. Now we know computation of taxable income. So how is taxable income? We need to work out from employment, business, investment, other source, qualified payment and relief we can do. So once you work out this thing, go taxable income. Now application of taxation and work out the tax liability. Remember, so in your examination purpose, we work out the tax liability of the company. Therefore, no relief are there because reliefs are only for individual. So individuals are relief work out around it, personal relief, they have 1.2 million for this particular year, and rental relief is available only for who is having rent income. Another thing is solar relief. That's only relief. Okay, any questions? I short break it. So, sorry, what you told is correct. 2% on the interest in case of the tax payable. 1.5% interest is on in case of the refund. So anyway, we'll have a separate discussion of the administrative question.
Hello.
Hari gila tiang itu bukan kalau dua. Makan boleh. Ya, ada belum nih?
Dah, kita kan. Ada yang belum.
Apa lagi? Oh, lagi. Sama dia kan? Kami පල්ලෙන් වංකේ කියතුනේ ඉතින් තීලා පොඩි පොඩක් කියන මොකද ස්කෑන් Baik, maka baru ini sebagai apa
Galle, look at this. Right, calculation of tax liability. In case of the individual as well as we look into the corporate tax liability of income tax liability for a company. So now we know how to work out the income tax liability. If the tax liability is coming from tax on taxable income, what we are discussed, and tax on final withholding amount. If you check with the first tutorial, the same slide was there. Right? Tax on taxable income, that's how we work out. Now we know taxable income, we need to work out taxable income. When we work out taxable income, we remove that final withholding amount. So, but that we have already paid tax. That is also our tax liability in Sri Lanka. And other thing is tax on taxable income. Total we call tax liability. Total tax liability in Sri Lanka, right? So on the tax on taxable income, this is the way we work out, and how to work out the tax liability. So final withholding amount we discussed, right? So in case of the final withholding amount, so pay a deducting tax at the payment. Right now we know what in case of the employment income, investment return or service fee payment. So if it is final withholding, so once he deduct and pay to the tax authority, he doesn't have any more tax liability, but it is part of his total tax liability. It should be there, right? It should be there. So and tax on taxable income, we work out taxable income, and thereafter we work out the tax liability. Right? So that is the total tax liability for Sri Lanka tax purpose, income tax purpose. Right. So company. So in case of the corporate tax liability, company shall be liable to tax separately from its shareholders. Shareholders and company are so different. So therefore the companies separately we need to work out tax, and shareholders tax liability we need to work out separately. All business activities of the company shall be treated as conducted in the course of a single company business unless different tax rates are applicable. That means in case of the company, they can do whatever business. Say the same company, they can do import and local sales. Manufacturing and selling. Agriculture. Hotel. So like that, they can do whatever business it is within the legal framework. Now after the, in case of the Company Act, there is no restriction to do business. Whatever legal business they can do. So therefore, that purpose it says all the business activities of the company, business activity shall be considered as one single business unless there are different tax rates. Right? If say agriculture industries tax at say 15%, so then we need to work out separately that part. Whereas others are taxed at say 30%. These are one single transaction. This one separate. Need to be worked out. Therefore, taxable income need to be worked out separate. But right now, in Sri Lanka, we have only one tax rate for this type of thing other than 40% tax rate. So if it is there, it should be separately worked out. Taxation of a shareholder. Resident company, in case of the resident company, it is dividend. So that's why it says the company is separately taxable because it is, definition of the person, right? The shareholder investing in the company. Company doing business. Tax rate on his taxable income. Tax need to be worked out separately. Shareholders getting return from there. In case of the resident company, they are paying dividend. Dividend means tax. You know that now. When the company distribute dividend on their profit, so they are deducting 50% tax. That is shareholders' tax liability. Right? Shareholders' point of view, that is their tax liability. But the company is deducting tax when they are declaring dividend out of profit. They deduct 15% tax and pay to the shareholder. That is shareholders' tax liability. Right? Therefore, company tax liability we need to work out separately. Shareholder tax liability we need to work out separately. Right? It could be company or it could be individual or whoever, shareholder. So therefore, shareholders are separately, company separate. In case of the non-resident company, now you know what is non-resident company? Company incorporated outside Sri Lanka. Right? So if they are doing business in Sri Lanka, so they have business income, non-resident person, that's the source in Sri Lanka, so they are liable for Sri Lanka tax. So they are paying tax on that part, and they are after paying tax on their profit. If they take that profit back to their country, resident country, it is subject to remittance tax. Rate is, remember, 14%. Whereas dividend tax rate is 15%. But if you read that 11 Act before 1st October 2022, dividend tax also 14%. In effective from 1st April, 1st October 2022, dividend tax rate has been increased to 15%, whereas remittance tax keep the same rate. Therefore, when a company doing business in Sri Lanka, it's a resident company, on their taxable income, they are paying tax separately. Say 30%. After paying tax, that profit can be distributed. You know always that dividends are distributed from the profit after tax. Right? So dividends are we are declaring in the changes on equity. Statement of changes in equity. That means that after paying tax, that profit taken to the changes statement of changes in equity. From there, we are declaring dividend. That means profit after tax. This is profit after tax. We are using to declare dividend. So that is subject to again tax at 15%. Therefore, that income already taxed in the hands of the company and thereafter again tax. That's also double taxation. Right? So then when they are taking dividend, the dividend is subject to already more than 30% tax rate, almost 45%. Right? Why? Company is paying 30%. After paying that thing, again they are paying 15%, more than that 45%. Right. In case of the non-resident company, non-resident government. When they are doing business in Sri Lanka, on that profit they have to pay tax. Say that is also 30%. After paying 30%, they're taking that profit back to their country. It is subject to remittance tax at 14%. Right? On the profit remittance, they are having more tax. So, taxable income and tax rate. So, special rate or the higher tax rate, gains and profit from the manufacturing and sale of import and sale of any liquor or tobacco product. On that particular business, tax rate is 40%. So, gains and profit from conducting wedding and gaming, that is also 40%. Other than above, taxable income of a company is liable for income tax at 30%. Right? Whereas the company's taxable income includes gain from the realization of investment asset, that is also taxed at 30%. Right? So the tax rate applicable for company. Company tax rate. Company. On taxable income. Realization of investment gain on realization on gain on realization of investment asset. Taxable income, I could say special rate could be rate could be gain on the realization of investment asset, it is 30%. Normal rate again 30%. Higher rate So manufacturing, import of liquor or tobacco product, betting and gaming business, again 30%. Low rate, now this is applicable only for BY. As per agreement. We don't know what's the rate. As per the agreement, if there's a rate, say 15%, 10%, whatever rate, that can be. Right now, in Sri Lanka, we don't have lower income tax rate in the 11 Act. So simply say it's 30%. So this is 40%. As per the BI, right? It's BI company. Yeah. The agreement says that trade is for a indefinite period, so that rate can be applied. Gaming, betting and gaming. The same thing. Conducting betting and gaming, import and sale of liquor or tobacco products. And 40%. Export of services, exchange. 24, 25 exchange. 5, 6, 10%. That is after effect 25, 8% and 25. Right? Right. So now apply the tax rate and work out the tax liability. Right. So thereafter, once we work out the tax liability, if there is tax credit, so tax credit means payment, tax payment. Now we know that withholding tax was advance income tax. Other than final withholding, we can deduct foreign tax credit. So if any, that also can be deducted, provided that that particular income is there, the taxable income, the taxable income. And installment tax payment, now we know SA payment, self-assessment tax payment, that also can be deducted. Once deducted tax rate, balance tax payable or excess payable. That refund. You can claim that refund. Where a resident company distribute dividend to shareholders, if such dividend is attributed to the profit from the business. That means when the resident company declare dividend from its profit, business profit, utilizing its profit from the business, it shall be liable for advance income tax at the rate of 15%. Same thing, right? Company shall withhold tax at the time of the payment of such dividend and able to the commission general within 15 days after the end of the calendar month where any tax has been withheld during the month. Right? Tax so withheld on dividend paid to the resident company, paid by a resident company shall be finally withholding payable. Right? So we are a non-resident company which carries a business in Sri Lanka through a Sri Lanka permanent establishment. So Sri Lanka permanent establishment means non-resident company means which company is not incorporated in Sri Lanka. They are registered and principal office is not in Sri Lanka. Effective management is not in Sri Lanka. So if they have a permanent business place in Sri Lanka, that recognized as permanent establishment. Right? So that means there is a fixed business location in Sri Lanka. In such case, they are liable for Sri Lanka income tax at the rate of 30%, just like the branch office. You know that HSBC, they have a branch office. It's not a company incorporated in Sri Lanka, but they are doing business in Sri Lanka. It should be considered as a separate person for Sri Lanka tax. They have to pay tax at the 30% on their profit. And once they pay that thing, if they take that money back to their country, or the profit after tax, company shall withhold tax at the rate of 40% at the time of the remittance of such profit and remit to the Commissioner General within 15 days after the end of the each calendar month, where any tax has been withheld during the month. The employee, right? So in case of the tax on profit remittance means what is? This is applicable for non-resident company. It says if a non-resident person retain the total income earned in any year of assessment commencing on or after 1st April 2021 in Sri Lanka for a minimum period of 3 years, that is applicable for non-resident person. Non-resident company, after paying income tax, if they retain that profit in Sri Lanka for a period of 3 years and invested in this type of thing, 3 years, immediately in which the income is earned and invested the same in Sri Lanka to expand its business, right? Or expand its business, or to acquire shares or securities for Colombo Stock Exchange, investing in Colombo Stock Exchange, or purchase or acquire any treasury bill, treasury bond, or Sri Lanka international sovereign bond issued on behalf of Sri Lanka government. If somebody is keeping that money for a period of minimum 3 years, after expiration of 3 years, they are taking that profit back to their country. The interest tax is 0. So intention is to keep that money at least for a period of 3 years in Sri Lanka. If they are taking back that money back to their country, so remittance tax rate is 0. Otherwise, remittance tax is 15%. This is applicable only for non-resident person, right? So remitted profit means amount remitted, physically remitted amount, or retained abroad out of the profit and income of the non-resident person that are subject to income tax in Sri Lanka. So they are not bringing back that money to Sri Lanka, but it is in outside Sri Lanka. That is also considered as remitted profit. Any amount received outside Sri Lanka by or on behalf of the non-resident person from conducting business in Sri Lanka that is subject to income tax in Sri Lanka, excluding dividend paid by a resident compared to the non-resident person, right? So when the resident comes, this is say two country one Sri Lanka. So company in country one, that is resident company for that particular country, and they are coming to Sri Lanka setting up a branch office, that is permanent establishment. So we need to work out the taxable income of the branch office separately and apply the tax rate. 30% say that is profit after tax. They are taking back that profit to their country. Remittance tax comes to the operator, right? Is that clear? With that computation, I mean the part of roughly any question you can ask. Any question? Now it is 40 marks question. That part has been done. Right, question bank one, the practice question. So ABC Service Private Limited providing the below details for the year ending 31st March 2025. Profit before tax was rupees 65.75 million. Depreciation charge for the period was rupees 2.6 and capital provision was rupees 6.67 million. Further, rupees 5.64 million has been paid as gratuity for the retired employees during the year. The details of property, plant and equipment are as follows. Land and vehicle yard, land, that is vehicle yard, 25 million. So it says it should be 24. So much, and ending balance is this much. Building, 15 million during the addition and closing balance. Motor vehicle, opening balance during the addition, disposal and closing balance. Specialized truck, opening balance, same thing. This is at cost. So motor car, trailer mount container, 12.5 million during the additions, no disposal, closing balance. Computer and office equipment, 1 million, addition during the 7 million, closing balance. Computer software, opening balance, addition, closing balance. This should be changed as 2024. During the financial year, the company constructed a vehicle service station, which is strictest for vehicle service operation during the year 23-24. Right? On June 1st, the motor lorry originally acquired in the year of assessment 1924, rupees 5 million, sustained damage due to the accident. On the disposal of this vehicle, rupees 2.5 million was received from the lorry, which had been employed in the delivery of food. The motor car has been used by the company directors and senior staff members, although formal travel records are not maintained. A monthly non-cash travel benefit is recognized to advance personal income tax. In accordance with the company policy, all computer software is utilized over a period of 5 years. The previous software was developed in the year 1819 and consequently a new software system was created during the current year, which an estimated useful life of 5 years. This software designed to optimize client transport requirements and vehicle allocation. This was developed by RP Partners, Specialized Partnership for Software Development in Sri Lanka. The total cost is settled via bank transfer by the company. Company has incurred an improvement cost of 12 million on a specialized truck, which was purchased during the year 19. And cost of the truck was rupees 12 million. So they have included original cost also 12 million, improvement cost also 12 million. Unless especially when otherwise mentioned, all the companies as of 1st April 2024 were initially acquired in the year 1920. So details of ROU assets are as follows. Right, balance and ending balance. The above land are used as a vehicle yard. Rental paid during the year above assets was rupees 1.48 million. Interest charge on the lease liability was rupees 1.65 million. Right? Are you pay that year of investment? No. And upload it. So that is part of the question. Actually, this is not the full question. So you would work out first thing is assessable income, from business,
අර උණු බලපුවාට කියනවා ඒකට අර අන්සම් වෙන්න පාර්ලිමේන්තු උදව් දැක්ලන පාරේ Mana akan ikut tuh dan mana yang
Right. So, it's engaged in the business of providing transport services and providing the below details for the year. Right. So, I have changed that year requirement. Actually, this is from previous exam type question. Right. Exam type means is the exam question, same figure. So, with now this I pick some areas, not the whole thing. So they have given the details. The examiner has given the details. Profit before tax. So you know that our tax computation or the computation for taxable income can be started from the profit before tax. Right. So then when we work out that one, now profit before tax, that is the base. So we are taking the profit before tax. Tax is not a deductible expenditure. Therefore, we are using the profit before tax. If the profit after tax they are providing, tax need to be applied. The tax is disallowed. So on the profit before tax, you know that this one part is income, other side is expenditure. So income side we have checked. So investment, other source of income. Just like the investment income. If it is the case, we have to remove that part because we have worked out the taxable income from the first business. The taxable income from the investment we need to work out separate, right? And any adjusting event. So it is there in the income statement, but adjustment need to be done. Or it is not there in the income statement, adjustment need to be done. I could say tax adjustment. Example, disposal of depreciable asset. Expenditure side also we need to check. allowable expenditure. Disallowable. If we work out that as the profit before tax, is there any allowable expenditure? We have already considered. Again, we need not to consider, but we have to mention that. Any allowable expenditure which is not there, we can count. Disallowable expenditure, if it is there, we have to add back. Disallowable expenditure, if we have not considered here, we need not to worry about. Right? That is the approach. Right. With that understanding, shall we work out this one? Right. Is ABC Service Private Limited. ABC Service Private Limited. Right. Computation of taxable income from business. Year of Assessment 2024-25. What we learn up to now? Person, what the computation of this period. On healthcare, we are working out. This plus side, this is minus side. So we'll start from profit before tax. How much? 65.75 million. Right. So thereafter details, we have to go by the details, right? Depreciation charge for the period. That means already they have deducted the depreciation. But depreciation is a provision. As per section 10, provisionings are not allowable. So depreciation to be add back. Now it has been already deducted when we mark out profit before tax. Tax purpose, it is not a deductible expenditure. Therefore, we have to add back. How much? 22.6 million. So provisions are disallowed. Listen. Provisions disallowed. Right? So then gratuity provision. That is also a provision. Provisions are not allowed. Same thing. How much? $6,670,000. 6,670,000. Provisions are allowed. It has been already deducted. So gratuity payment. So that is the actual expenditure. Right now we are incurring. That is deductible. Remember, in the real financial statement, gratuity provisions are there in the comprehensive income statement. Right? But payment not in the income statement. Right? So payment we can pick from the event, not to the financial statement, or we can check with the cash flow statement. Cash flow statement shows the actual payment. If you are doing practically the tax computation, there are those things, the component of the financial, the full financial set is required. Otherwise, you have to get the confirmation from the person who is doing or the preparing financial statement. How much they get into provision, how much the actual payment, because definitely the payment are not there in the comprehensive income statement. Rather, we make a provision. From the provision, we make the payment. Remember, right? That is practically how you should do. But in the examination context, it says these are the provision, this is the payment. So you can adjust the matter of putting that. So it is not there in the income statement. We have not deducted when we arrive the property code as the actual payment. Therefore, we can deduct. How much? How much? 5.64 million. Right? Clear? So in generally, I just want to know my Ghana exam context also. Right? Make a mark then, make a bargain then, make a bargain then, make a bargain then. I come. I just want to take a bargain then. If it is a work with the working, each working also contains marks. It may be say a capital analysis computation, say 10 marks. හැබැයි එක ලයින් එකකට භාගයක ගන්න වගේ තමයි වැඩේ. right? වාහේ කරා. එහෙම නැත්නම් ලකුණු 50 කොහොමද? එහෙම නැතුව 50 එක තැනකට දෙන්න කිව්වොත් ඉතින් කාටවත් හම්බ වෙන්නේ නැහැ ලකුණු. අරන් දුන්නාම අඩු ගානේ ලකුණු කීයක් හරි එනවා. කොයි හරි විවිධ දුන්නාම දෙනවා ලකුණු. ලකුණු කීයද දෙන්නේ? Right. So thereafter, may අතන මේ කීපාර ප්‍රශ්නපත්‍රය ගන්න. ඒකේ කැල කොහොමනේ කැල. ඊට පස්සේ so thereafter says, so as the practitioner of assessment liability, remember the financial actual financial statement එක විදිහටම තමයි යන්නේ මම. So note එක ඔයගොල්ලෝ වැටුණා PP note එකේ ඉස්සලා දෙනවා cost එක. cost එකේ තියෙනවා addition disposal. Right? And ඊට පස්සේ depreciation note එක separate තියෙනවා. And down value එක separate තියෙනවා. The full financial statement එක ගත්තොත් note එක අර එන්නේ අනිත් පැත්තට දෙන්නේ PP note එක සාමාන්‍යයෙන්. මොකද ගොඩක් තියෙනවා. right? එයා දෙනවා opening balance එක, addition, disposal, dividend transfer from each category මොනවා වෙනස් වුණා නම් ඒ වගේ ඒවාත් එක්ක දෙන්නේ. ඊට depreciation note එක. So ඔයාලට ඒක depreciation එක cross check කරගන්න පුළුවන්. Income statement එකේ තියෙන එක note එකේ තියෙන එකයි. And addition to cash flow එකේ තියෙන depreciation එක වෙනවා. So මම tax එක හදන්නේ ඉතින් කරන්නේ. So මම ගන්නවා මම කියනවා මට complete financial set එකක් ඕනේ tax එක හදන්න. නැතුව බෑ. නැතුව හදනවා නම් මම දානවා covenant note එක, I am not responsible for these things. Subject to this adjustment. tax එක එහෙම දාන්න බෑ, provision එකක් දාන්න බෑ අපිට එහෙම. Right? ඒක නිසා එහෙම. Right. So now we work out the capital allowances. So capital losses, right? So it's a coming as a separate note. In mama hadana mama hadana right? Well, make a method. This is working. Remember, this is working. Right? Working එක වයිකින් මේක ඇතුලේ වාර මොන දෙයක් කරගත්තට කපන්නේ. ඕන විදිහට ඕක ඇතුලේ හදුවත් එකම වෙන මොන නෝට් එකක් විතරද. හැබැයි මම work out කරනකොට this is working. This lead to why? I am work out only assessable income from business. මගේ tax computation එක කරනකොට මම ගන්නේ source of income assessable income from business. එතන working 1 කියලා රිපෝට් එකක් දාලා මම මේක රිපෝට් කරනවා. ඊට මේකට ඕන නෝට් එකක් දෙනවා ස්පෙෂල් නෝට් එකක් දෙනවා නෝට් 1 කියලා දාන්න මම මේ නෝට් එකේ හදලා. Then it's very clear, right? Anybody can understand, right? And it's not a complicated thing. Complicated anything. Like this, mama කියනවා යා හොඳයි මම හදන විදිහ ඒක නිසා ඔයා කැමති නම් ඒ විදිහට හදන්න කියලා. හැබැයි කොහොම හරි ගාන හදනවා නම් මේ ෆෝමැට් එක නැතුව ආගේ ෆෝමැට් එක හදුවත් කමක් නැහැ මොකද there is no